Hello everyone, Brian from Bearable Traders here. It's the weekend, Saturday, February 11th. And this, of course, is the weekend video. We'll take a look at what happened last week, and then we'll try to figure out where we might be going next week. Still got more earnings to get through, some interesting ones coming up, but we are through a bulk of the earnings season already. But let's take a look at what happened last week for starters. Okay, starting out with what happened last week in the markets. You had a number of central bank officials coming out indicating their willingness to keep raising rates and to fight inflation. Um, Nothing new. They've been saying that along, but maybe it started to sink in a little bit. You could combine that with some lackluster earnings and guidance that we've been getting from a number of the companies that have been reporting over the last week or two, and combine that again with the tremendous run that we've had up in stocks since the beginning of the year. So I think it just gave investors and traders a reason to take some profits after this big run. So we did finish down on the week, and kind of noted here that money did rotate back into sort of the safer large cap stocks. You can see here the Dow almost flat on the week, pretty much 0.17% down, but money rotating back into those big names, and obviously rotating out, or at least people taking money off the table on some of the riskier companies and stocks like the IWM small caps. They took the brunt of the selling last week. Energy was the strongest sector for the week. Russia announced that production cut. Maybe there is some other stuff going on there with China reopening and strong energy demand from that. Materials and consumer discretionary. Consumer discretionary is obviously down because people taking money off the table if they think consumers are going to start cutting back on their spending. And the 2-year, this is another thing that might have contributed to this sell-off, especially in the high growth sector, is the 2-year and the 10-year treasury really started to pop up. We'll take a look at that chart in a minute. But of course, when that happens, usually you get the dollar also going up in value, which might have taken the material stocks down. Strong dollar means lower material stock prices, generally speaking. And wrap things up, Bitcoin dropped on these SEC concerns that regarding staking and Kraken. So yeah, Bitcoin really rolled over at the end of the week there. And before we get into looking at some specific charts here, this is the part where I do a quick ad for my book on Amazon, Profiting as an Active Trader. If you haven't checked it out, rules, strategies, routines of an active stock, and even some information on options trading as well. So you can check it out if you haven't already. So let's take a look at some charts here. As always, I'd like to start out with the 2-year and the 10-year treasuries. And I'm finding this pretty interesting here because we're starting to creep back up again. Again, there's still lots of inflation around. We're nowhere near the Fed's targeted rate, and it seems like things want to start creeping up here. Let's take a look at the 10-year as well. And you can see here we kind of been bottoming along, almost a bit of a double bottom there, and a pretty big pop up there on the Friday. So again, it seems like interest rates are starting to head back up here, and the 10-year may go back up to 4%. So that's going to have an impact on the higher risk stocks, the ones with the higher PE ratios, the ones typically found in the Qs and the IWM. So transports, again, sort of canary in the coal mine for the economy. You can see we had a big pullback last week here, bit of a bounce on Friday, but overall, all you can see here on momentum is definitely coming out of these plays here. MACD and RSI coming back down, and we may actually retest this 14,750 level on the transports. Volume pretty light there. I think that's going to be sort of indicative of a lot of these here. So tried to break out, pull back there last week on the transports. Again, we're just sort of trading in a range. This is the Dow, of course, and you can see here we're pretty range bound, having trouble breaking out. But we seem to have held this level here. So again, volume fairly light, no momentum one way or another. Stochastics are turning down a bit though, which is not a good sign. But as I mentioned in the previous slides, there was seemed to be a rotation back into these dividend payers, safety trades, while we try to get through this bout of possible more interest rate hikes. The Qs, again, they took the biggest hit in the week, again with the interest rates going up and threat of more raises. You can see here momentum is definitely coming out of these stocks here, the Qs. Probably more downside here. Bit of an inside day or an inside week. Again, we seem to be kind of topping out here on the RSI, so I think maybe we've possibly put in a high for a little bit of a time here after this nice run up that we've had through January. And again, the SPY down on the week, had a bit of a bounce day on Friday, but sort of back down, retesting where we broke out from, which was right here. This 405 level is kind of where we broke out from, so I'd watch to see if we break 405. That'll be interesting to the downside there. And IWM, again, took the biggest hit this week. Came back down, retested where we broke out from. You can see the breakout right here, and now we've really come back and retested this level. So it's going to be critical that it hold here. These patterns where you break out from a certain level, and then come back and retest it, you either start to move higher again, or it becomes a failure. So this will be interesting to see if that level can hold. Momentum certainly is coming out. What I can say is we did start to bounce. We really got oversold on the VIX when we were down here, but this week we've kind of crept up. Friday, bit of a doji candle there, but Fridays typically volatility comes out as the day goes on, so we definitely have a little bit of a breakout going on in terms of momentum on the VIX, which again, as the VIX goes up, markets typically go down. People are starting to buy protection, getting a little bit maybe concerned that markets are going to sell off. So here we have the dollar. You can see here as interest rates start to creep back up again, dollar looks like it's broken this downtrend and is starting to trend up. You can see RSI momentum indicators starting to turn to the upside there. Dollar again breaking out of this weekly level as well. So not good for gold, not generally speaking not good for oil, but it's again, oil is partly on supply and demand as well. So you can see here, Bitcoin, this was really took a big hit when SEC started talking about more regulation on this. So again, we had this big bounce up, and we've had now getting a bit of a pullback there on Bitcoin. So let's get to some of the stocks I'm going to be watching this week. TNX, which is basically the 10-year Treasury yield. You can see here, as I've been talking all along, we definitely seem to have broken out of a downtrend. I'm not going to take the time to draw this line, but you can see if you draw a line right at top of these candles here, we are breaking out of this downtrend. Momentum is starting to pick up to the upside, and it looks like this 10-year yield is probably going to go higher. Where could it go? Maybe up to this 39 level. So maybe $1.50 from here. It doesn't move a lot, but could be a good follow through. AI, as I mentioned here, it does look like it's this had a monster run here on lots of volume. Volume's really pulled back here. So 22 seems to be an area that it seems to want to hold. So it might be an interesting level to get back into this thing if you didn't get advantage of this run here. I did have some of that, but didn't get it all, unfortunately. ATVI, I think I'm gonna be taking this off next week. It does seem to be really quite trading erratically, and I'm getting a little bit more worried that maybe this deal isn't going to go through, and I haven't been able to sell any upside calls, so I'm probably going to ditch that one next week. With the strengthening dollar, I've been short gold. I haven't used dust. I've used a Canadian one, but dust does seem to be basically emulating what I'm short in the on the Canadian stocks, which is a Horizon Beta Pro short gold miners, and it's a Canadian version. So this is what I'm playing here. Strengthening dollar. It seems like we're breaking out here. So this puts me short of the gold miners, not long. Flex, again, we're right back up to this 24.5 levels. Seems to be an area where I'll be watching next week, see if it breaks out. Lithium had a really nice pop up here. Got out of some and have a little bit left, but on this pop in the news that believe GE is going to help them get their mine up and running, their lithium mine, and they got this. I think they got some permits passed. So nice little pop on that news over the last couple of weeks there. Meta really looks like I had some calls on Meta last week. I'd sold them up here 200s. Got a nice rejection, so it looks like Meta could come down further. There's a huge gap here. I don't know if it's going to make it all the way down to fill it. Quite often gaps do get filled. So you can see a big gap down here. We eventually came back up and filled that gap again. This is a big gap to fill, but it certainly looks like it's trending to the downside. So I may either look at shorting it or selling some 190 calls, because this is definitely an area where it seems to have found a top. See what kind of premium I get. Tesla's had this monster run. Still got some puts down here at $60. They're just sitting there almost. They're basically worthless. Going to let them expire worthless. Keep the money, but because I sold them short. So in other words, I'm short them. So I sold them, got the premium, and now as long as it doesn't close below 60, I'm fine. And you can see here, it looks like we could pull back to this this trend line, which is somewhere around sort of maybe 190 area. Might be a pullback for Tesla. Don't ever cut Tesla out. And the Dow, finally, I'm looking at that. It is sort of range bound, but we do seem to be getting money rotating back into the Dow. So looking at that. UNG, I'm back in UNG again. It did put in a double bottom. Let's take a look at that on a daily. So if you look at this nice little double bottom here, we put in a bottom, took it long, sold most of it, got back out when it started to fail again, and now I'm back into it again, because it does seem to be holding here. So I'm holding UNG right now. Boyle might be another interesting way to play that stock as well. Let's wrap things up here. February 13th. What have we got going on? Some really important data coming out. We've got the CPI data Tuesday at 8:30. We've got PPI data coming out on Thursday at 8:30, initial jobless claims, and some retail sales on Wednesday. So lots of economic events to watch and impact the market. There's your Dow, SPY, QQQ, and IWM, current levels and support and resistance. And lastly, we still do have some earnings coming out this week. We've got, you can see there, I won't go through them all, but some interesting ones. It'll be Airbnb, UPST, which took a big hit, I think, because of a firm. We've got Roblox, Shop, and Roku, Cisco, Twilio. Yeah, a lot of interesting ones. DKNG, one I like to call Donkey Kong. And yeah, so still some interesting numbers coming out here, or interesting companies coming out here with their earnings this week. So that's it, everybody. I hope you have a good rest of your weekend, and we'll look forward to seeing you in the Bear Bull Trading Room, 8 o'clock. We start the day off with Jared engineering the markets, and then pre-market show with Carlos and possibly even Peter to help him out there. So, and then of course trading the market open with our members at 9:30. So enjoy, everybody, and we will hopefully see you Monday morning. Bye for now.